Hey, it's Tom here and welcome back to the channel. In this video, we're going to talk about financial independence, financial freedom, retirement. These are all big, kind of somewhat scary or exciting words depending on who you are, that basically all mean the same thing. All of those terms basically mean that you have enough invested in some sort of portfolio that pays you every week or month or year, and those payments from that investment portfolio more than cover your living costs. Now, retirement traditionally is a word that people often just relate to, elderly people that are finishing a career and reaching, a target retirement age of 63 or 65 or 70 years old or whatever it might be. But more and more, a lot of younger people are really getting excited about trying to reach financial independence as early as possible. We've got this massive movement, the FIRE movement, short of course for financial independence, retire early. And in this video, I want to walk through some of the calculations that you can do yourself in order to figure out how much you actually need to have invested in order to reach that target. Now, for me personally, I've got quite a mathematical, analytical brain, I suppose. So putting these numbers actually down on paper or on your computer is something that's actually really motivating for me. One thing is sort of figuring out the actual number we need to hit. And the second one is figuring out a plan of how we actually get there. How much do I actually need to save each month or each year in order to chip away at that target and reach that goal as fast as possible? That is what we're going to be covering today. Now, before we get into that, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, Hatch have been a long-time sponsor of the channel, and they are my personal broker of choice for me as a New Zealand investor investing in the US share markets. Basically, I first switched across to Hatch about 2 years ago now, and really that was purely driven at the time by cost savings. At the time, I was using a broker where I had to actually call that broker over the phone, pay like $90 US a trade, and now I can do those same trades in Hatch online really simply for $3 US. So huge cost savings in terms of fees. One of the cool things that Hatch are always doing as well is sort of constantly improving the platform. And one of the big launches that they've done just in the last month or so is actually launching kids accounts. So you can now set up investment accounts and portfolios for your kids and basically get compounding working on their side really early. As you'll actually see in this video today, one of the advantages to being a younger investor and getting started compounding early is that you actually don't need to save as much money in order to reach a really big number at whatever your target retirement age is. So being able to set up a kids portfolio now in Hatch is very cool to kind of get the eighth wonder of the world, the power of compounding, as Einstein said, working on your side for your children. So if you're interested in checking out Hatch and what they're doing with kids accounts or the regular accounts, if you're a Kiwi looking to buy shares in the US, you'll need to head to the link hatch.as/investingwithtom. If you go to that link and start a new Hatch account and deposit 100 New Zealand dollars into that account, you'll get a free $20 top up from Hatch so that you can get started investing with a little bit more money. Okay, so we're over at the computer now, and I have basically built a calculator that has two different components to help you try and calculate your financial independence sort of target number. Now, the first part is essentially about calculating that number specifically, which is this sort of required financial independence retire early savings number. And the second section is basically all about compounding your investments and basically trying to figure out, so once you've established how much you think you might need in retirement or to achieve financial independence, how do you get there? So, if we come up with a number like $1 million, for example, how do we actually arrive at $1 million or more in investments by, saving and compounding in the stock market and so on over a long period of time? So, before we get into the details of actually running through some example numbers, I just want to show you a couple of the resources that I've used to come up with my own personal figures. These are not my own personal figures in here at the moment. But one of the things that is going to vary most from person to person is basically the annual living costs. And there's a couple of ways you can calculate it. If you're already really good at budgeting, you may already know this figure, but I know that a lot of people don't. But I'm going to jump over to a couple of web pages and just talk you through some of the resources that I've found that can be quite useful to calculate some figures. The first one, so this is on the Koura Wealth page. Koura Wealth is a KiwiSaver provider. I have no affiliation with them or anything, but they put out some sort of rough guidelines on what they think that someone might need in retirement. And this is basically sourced from Massey University, so they do a study every single year, basically looking at the spending of retirees. And as you'll see, there's quite a wide range in weekly spending. So we have someone living in Metro, no frills budget, $598 per week in a one-person household, right up to what they call a choices budget, living, Metro, $1,418. So there's quite a wide range there, anywhere from about $600 a week to about $1,400 a week. Obviously, if you annualize that over a full year, so multiply those numbers by 52, that will give you a good idea of how much you need to basically retire and just live on for your investments, what sort of income you're going to need from your investments. So that's the first resource, and that's a really nice guideline. Another one I found, which is also a nice guideline if you haven't gone through the exercise of calculating this yourself, is actually a sort of a random website I came across about people looking at moving to New Zealand, of all things. So I basically went through and found some of the financials in here. This was a really good write-up on basically the typical cost of living in New Zealand if you were some US citizen or something looking at moving to New Zealand. And it basically came up with a couple of different ranges. So if you're a single person, the range they landed in was 3,000 to 4,000 New Zealand dollars per month. Obviously, if you, again, multiply those figures by 12 in this case, that will give you an annual figure. And the other stats that they did was for a family of 4. So if you're someone that is really focused on retiring as early as possible when you've still got kids in the home and all that sort of stuff, you're obviously going to require a little bit more to continue funding those expenses, and that landed at about $6,000 to $8,000 a month. Seemed to be pretty typical. So those are some nice rough guidelines. I guess if you really want to sit down and do this properly for your own situation, probably the best tool that I've come across is actually on the Sorted website. Sorted have a budgeting tool which you can get into a lot of detail with. So a couple of ways to do this. One of the nice ways of doing it is basically putting in your existing income. Let's just pick the family of 4 example from the previous article that we looked at and call it a mid-range of about 7,000 New Zealand dollars. If I put in $7,000 into this input and just click next, and then just click next, that will take me to creating a budget template. And basically it picks up a lot of the typical expenses for an average person. So let's say that we own a home. Let's say that we have no kids or dependents, but maybe I've got some pets. Let's say that I have a vehicle. My savings goals is retirement. I don't have any debts. And then I can create a template. And basically once we've got that template there, it allows us to go through and sort of start allocating some numbers to each of these individual expenses. And if I click this little plus for everyday expenses, for example, you can go through and it's kind of picked up, I've said that I've got pets, so it's pulled in pet food here. And I can start to estimate what I tend to spend each month. And although this is, a little bit of grunt work up the front to kind of go through everything here, this is a really good way of getting it super accurate, and you'll get some cool reporting on sort of what percentage of your income you tend to spend on each of those different categories. And if you think that there's anything that you'll probably won't be including in retirement, you'll see that you've actually got potentially a bit of a surplus in your budget once you've filled that all out as well. So those are just a few tools that you can use to actually calculate the annual living cost number if you don't know what that is already, because that is quite an important one. The second number here around investments required, so this is basically just working backwards off your annual living costs. So if it's saying that you have annual living costs, in this case of $40,000 a year, we use something called the 4% rule, which I'll talk through in a sec, to basically work backwards and figure out how much you would need invested to basically supply that income kind of indefinitely to you. So the 4% rule, if I just jump over to Investopedia here, this is basically a pretty well agreed upon rate of withdrawal that you can make from your retirement accounts as a retiree. So it was essentially come up with from a study over a very long period of time, from 1926 to 1976. And they essentially studied basically every possible period of time within that 50 years to figure out what would be considered a safe amount to withdraw from a portfolio. And it was found that even if you landed in severe market downturns like it says here in the 30s and in the 70s, even during those times, withdrawing 5% withdrawing 4%, was a safe enough amount for you to be able to survive for at least 33 years in this case. And they're saying that you can generally get away with as much as 5% withdrawals. So that's kind of how I'm using the 4% rule to figure out the amount that you actually need in retirement. This article goes on to explain that there is sort of some contentions about this at the moment. If you're interested in reading that, feel free to check it out. All of these articles and the spreadsheet will all be linked down in the description below. But basically it goes on to say that you may actually need to budget on withdrawing slightly less than 4% moving forward because interest rates are so low and the returns you can get on bonds and so on are also quite low. So if you only had to live on 3%, for example, 3% withdrawals, that means you might need basically more in savings because if you still need to live on $40,000 a year, but that needs to be 3% of your investment savings rather than 4%, it means you need a larger amount of investment savings. So nonetheless, that is the 4% rule, and that's kind of what we're working on in the spreadsheet. The other big variable that is really important to keep in mind with this living cost number in particular is this is going to be your living costs when you reach that financial independence number. So one of the big variables that may or may not change for a lot of people is really housing in that one in particular. So if you've got an annual living costs in here of say $40,000 per year, that is $40,000 per year once you reach retirement. So if your annual living costs are maybe $70,000 a year at the moment because you're sort of aggressively paying down a mortgage or something, but you think that you're going to be able to get by on $40,000 a year in retirement because your house may be paid off, whatever it might be, then that is the way to set this up. And in this case, I've just plugged in some example numbers to say, I want to live on $40,000 a year, which means we need $1 million in savings. It's worked that out for us. If I want to live on $100,000 a year, I can pop that in and it's going to tell me I need 2.5 million. So once you've got those numbers established for yourself, basically the final part of this equation and the kind of exciting part is starting to figure out how much you would actually need to save and, maybe with your current savings rate, how quickly you can get to that goal. So let's keep it right up there at $100,000 a year and say we need, $2.5 million in investments. And let's say I've currently got 100,000 already invested, just again for argument's sake, and I think I can save $15,000 a year. It's always nice when it does this because it means the number's getting too large for that column, so let's drag that out. And let's say, and that'll be why we're only saving 15,000, not 150,000. That would be nice. And the annual savings number in here should be the annual savings towards your retirement portfolio as well. That's quite an important note. So if you're also currently putting, an additional $20,000 a year towards trying to pay down a mortgage, for example, that is not going to be contributing to, a portfolio of shares and bonds and so on that's going to be able to pay you in retirement. So that's an important one just to keep note of as well with the annual savings. And let's say we've got a rate of return of 7%. So long run average return in the stock market has been probably somewhere between 6 and 10% per year, depending on what time frame you look at and depending on what stock market you look at. Let's say I'm currently 26 years old, which I actually am in this case. And then it's telling me if I retire at 65, then I'm going to have $4.1 million. And that is in bright green, which is telling me that it's higher than this number, basically. If that number was less than 2.5 million, it would tell me it's red, and the maths isn't checking out, the maths isn't adding up for me to reach that investments required number by my target retirement age. And then I can kind of just play around. So 65 is going to be, I'm going to have more than enough by these calculations at that point. So what if I pull that back to 55? Now that's telling me if I only do that till 55, I'm going to have 2.021 million, which is short of my target. Well, let's say, you know, I want to sacrifice a little bit more and I think I can actually save $20,000 a year if I really have my sort of target set on 55. So now getting quite close. I can play around and say, you know, what happens if I retire at 56, and all of a sudden we're there. So this is quite a cool calculator just to play around and see what is possible. Obviously, if this annual living cost was, you know, much lower, then you can certainly get there much sooner, or if you save more aggressively, you can get there much sooner as well. So dropping it down to that 40,000 amount, you know, I'm able to actually pull this retirement age target back by quite a bit by the looks of it. I can get it all the way back to, looks like early 40s, maybe mid 40s. Yeah, we've just snuck in there. So if my retirement investment sort of living costs are about 40,000, means I need $1 million a year, or $1 million invested through the 4% rule. If I currently have 100 grand saved and I think I can save an additional 20 grand a year, then, and I earn a 7% rate of return, I think I can get to that number by 44. So really cool calculator that I've just kind of put together so you can play around and have a bit of a look at what the numbers might look like for yourself. And it's really interesting to actually try and put some numbers behind this. I think for a lot of people, this is actually a bit more achievable than they might have first thought. Hopefully some of the numbers in here aren't too scary, and this shows you sort of the advantages of compounding. $1 million can look like a big number, or $2 million can look like quite a big number for a lot of people. But when you break it down into you know an annual goal that you would have to save in order to work towards that final number, I think for me personally at least, it looks a lot more achievable. So that is the calculator. Again, I will leave all the links that I've referenced in this video down the description below, as well as a copy of the spreadsheet. I'll leave a Dropbox link down to that below. But for now, let's jump back to me standing in front of the camera and giving you a quick outro to this video. There you have it. That is my simple calculator on trying to figure out your financial independence, retire early number. Personally, I find this kind of stuff really motivating. It puts down some hard numbers on paper, or on Excel spreadsheets in this case, that I can work towards over time. I can chip away at. And I know that if I'm able to reach my savings goals each and every year and continue investing and making a good return, that I'm going to be able to reach, you know, my target retirement age and target number right on plan and right on track. And if I can exceed those numbers and save even more than I'd initially anticipated, I'm getting even further ahead and trying to, you know, reach that goal as fast as possible. So I do hope you enjoyed the video. If you did, please hit like and hit subscribe. I would love to hear your thoughts on this whole financial independence, retire early sort of movement as well down in the comments section below. Definitely let me know your thoughts on that, and whether this is an exercise that you've already gone through or something that you're interested in going through after watching this video. I'd love to hear all of that, but that is it from me today, and I will see you in the next one. Cheers.